Hi, hello, how are you doing today? So today I am here with my friend Brian Scully. Not only is he a friend, but he is someone that I refer to frequently in regards to helping my buyers in the mortgage process. How are you doing today, Brian?
I'm doing great, Marie. Thanks for having me. It's good to be here.
It's always a pleasure to have a conversation with you. So Brian, can you tell me with the changes that might be going on in the mortgage industry due to the COVID-19 virus. Do you have some insight on that for us today?
Yeah, sure, absolutely. There have been a few changes to some of the mortgage guidelines, some of the rules with regard to some of the loan programs and minimum credit score requirements. The good news is most people are still able to get qualified for a loan, and we are getting the loans closed, even with everything going on. Mortgages and real estate are in Connecticut are considered to be essential services, and most of it can be done paperless. So we are still getting loans done. But if you haven't recently updated your pre-approval, you're going to want to talk to a mortgage person and discuss your current credit score and make sure everything looks good.
So that's a good point, Brian. So as far as changes in credit scores, have you seen a change in the recommendations from the lenders on what they're accepting for credit scores at this time?
Yes, we have. So some of the area that's been impacted the most is the FHA loan products. So primarily there's two main types of loans that we do the most frequently are FHA and conventional. So, on conventional, the credit score, for us at least, the credit score requirements haven't changed too much. Those are still available with a 620 credit score. Although some banks have increased their credit scores, so I've been able to help a few clients that maybe were, not getting approved with another bank. And now on the FHA, prior to coronavirus, we were doing FHA loans with a score as low as 580.
Oh,
Now we have quite a few banks we work with. Most of them have increased their minimum credit score for FHA to 680 now, which is a pretty big difference.
yes.
Anybody that
Wow.
has a credit score less than 680 that was planning on going FHA, they now need to come up with a plan B, maybe get approved for conventional or maybe like one of the first time homebuyer programs, something like that.
Great. Thank you for that, Brian. So another question I had now that you mentioned, like, well, maybe they were FHA, we might have to do conventional. The one thing I like when I have my clients work with you, and maybe you can explain to them, is the difference between working with just one bank when they come to me and say, I've been approved by XYZ Bank. Uh, what is the difference with Ravis Mortgage? Why would there be a benefit to being with you?
Absolutely. So especially in uh, the current environment, I'm really pleased to be working with a company like William Ravis Mortgage because we're not a bank. We have essentially what we do is we are what's called a correspondent lender, which means that on most loans, we are going to review and approve the loan with our own staff. And then we fund the loan, so we're acting like a bank. But after closing, what we do is we transfer or sell the loan to one of the 30 different banks that we work with, and then they collect the payments for the next 30 years. So the advantage of doing it that way is, one, it helps us shop for the best interest rates available. But especially in a time like coronavirus, where lots of banks are changing their guidelines, we're able, if one bank says, okay, now we've increased our credit score to 700 minimum, and then there's another bank that's still doing it with 660, if that borrower has a 660 credit score, it's very easy and seamless for the customer for us to just say, okay, kind of even behind the scenes, we're just like, okay, we're going to sell this loan to this other bank. So it gives us a lot more flexibility to still get the loans approved when the rules change, which is basically what's been happening recently.
Great. So when you say seamless, it's not like they have to reapply again to another bank, that you have all their information and
Exactly.
you're doing the shopping for them.
Exactly. Yeah. It's really easy for the buyer. They don't have to reapply. They don't have to provide any new documents. We just update the loan and get it done.
Awesome, awesome. So, and I do have to say, I've had personal experience with Brian. When we moved here to Brantford, he helped us out, and it was all seamless. It was a great experience.
Thank you
So
so
there's
much. Appreciate that.
my personal testimony to you. So tell me, on the initial call, when I say to a potential buyer, they're like, "Oh, I don't know if I can afford it. This, we really want to move." Uh, when I have them contact you, what's the initial conversation like, and what things would
Sure.
they need to have available?
Yeah, so there's kind of two parts to getting pre-approved for the mortgage. One is I would like to have a phone conversation with the buyer and find out what it is that their goals are and what they're trying to do. And it's a pretty, easygoing conversation. I mean, usually one of the first questions I'll ask people is, hey, what is it you're thinking about trying to do? Do you have a town in mind that you're interested in? Do you want to buy a house? Do you want to buy a condo? How much do you think you might want to do for the down payment? Do you know what your credit score is like? Pretty easy questions just to get a feel for what direction they want to go in. And then it's also really helpful for me to find out how they get paid, which is really important in doing a quality pre-approval. Are they on a salary? Are they commissions? Do they get a bonus? How much was the bonus this year? How much was the bonus last year? And actually talking with somebody on the phone about that really generates a quality of pre-approval so they don't run into problems down the road. The other piece of it is just kind of getting all of their information into the computer system. And frequently I'll do that with my online application form. So sometimes people fill out the online application and then I talk to them on the phone or introduced by email. Sometimes it happens that way. Or sometimes I'll have the conversation, ask about how they get paid, and then I'll say, hey, let's get your information in the computer. Can you fill out the online application? And that way, too, the benefit of doing it as online is that introduces them to our online portal, which we're using exclusively now during coronavirus, so we can do everything paperless. So once they have their username and password for the online portal, then they can upload all their documents there. They can electronically sign all the forms and do everything, from home that they need to do to get approved for their mortgage.
Great, great. Thank you so much for that. So I'm finding, and we've been working together this past week, that there are certain areas here in Connecticut that are very low in inventory, especially in a certain pocket of price range, especially the first-time home buyer. So what do you see happening, and any advice that you can give to this type of buyer at this time?
Yeah, absolutely. So this is very true. There's demand for people that want to buy homes. There is not as a lot of homes on the market to satisfy the demand that's there. So particularly, in a lot of the areas that I work, I would say a single family home in the 250 to 450 range is in a lot of demand. And, not only for first time home buyers, but there's also, a whole generation of people that are downsizing. So if you have a $350,000 ranch that's, 2,000 square feet, there is a lot of people that want to buy that home in multiple generations. And so, it makes sense too, if you think about it, not a lot of people, not all people, I should say, or as many people want to open up their house to strangers to come in and view it right now. So there's not as many houses coming on to meet that demand. And so we're seeing a lot more multiple offer situations. I had one the other day, they were making an offer, and there was 9 offers on the house. Now, that's not every house, but that gives you an idea of if it's priced well, if it looks good, and it's in a good location, it comes on the market, there's people that are interested in buying it. So, sorry, a little bit long answer to your question, but tips to get ready are, get pre-approved ahead of time and have your ducks in a row. If you're pre-approved and you've already uploaded all your documents to my website and you find yourself in a multiple offer situation, you're going to have an advantage because we are going to be ready to go as far as getting your loan into processing quickly, which sometimes if you want to close faster, that makes a big difference in a multiple offer situation.
Great. And my last question, and I've had different conversations with people that say, oh, I'm renting, I can't afford to buy. Can you give some tips and advice on those people of the rent versus own, and what a minimum down payment would be for that?
Yeah, absolutely. So, I mean, we've seen rents have gone up fairly significantly over the last few years. And at the same time, mortgage rates have come down. So, my biggest suggestion would be don't just assume that it's cheaper to rent. I would, contact a mortgage person like myself and just say, hey, I was planning on renting. I'm just curious, if I were to buy a similar home, what would the mortgage payment be? And you can have a quick conversation with the mortgage lender and you can see if it really is cheaper. The other thing too is, I think, I'm a big believer in just the value of owning a home. I mean, if you pay, $2,000 a month to a landlord, that's $24,000 a year over 10 years. That's $240,000 you gave to that landlord. What do you have to show for it at the end of 10 years?
Right.
Much. If you own a home and you pay that same $2,000, or even if the payment was $2,200 instead of $2,000, I still think it's better to own a home if you're going to be in that home for a while, because over time you'll pay that mortgage down. Over the long run, home values go up, and statistically it's been proven that homeowners have more net worth than people that are renting, and that's just basically because of those two concepts, that your mortgage balance goes down and your home value goes up over a long period of time. So does that answer your question?
Yeah, that was great.
All right.
Well, Brian, once again, it's always a pleasure to have a conversation with you, and I look forward to doing another one soon. We'll keep you all up to date on what's going on. If anything changes in the market, Brian and I will definitely be having a conversation and sharing it with you. Thanks again, Brian.
Thanks so much for having me. Have a great day.
Okay, have a great day, people.
Bye-bye.